What's going on? Welcome back to the channel. So today we're going to talk to you about Twilio. They just dropped their earnings. I want to go over the absolute key highlights from the earnings that you need to kind of take away, what the support and resistance points are, what analysts are thinking, and everything else you need to know. But first, make sure you guys hit that thumbs up. And with that, let's get right to it. So they did have their earnings closed on Friday at $125.17, down 15.01%. 122 the low, 131 the high. So kind of volatile day. Aside from that, looking at the actual key metrics, so they did miss on their earnings per share. They beat on their revenue by 12.7 million. I'm going to go over their future guidance in a second. But aside from that, looking at their earnings, the implied move going into their earnings was 9.08%. So definitely did far exceed that, and that was largely linked to their future guidance. But even looking at what shorts did, shorts were anticipating a miss, and you can always tell that based on what they do leading into a big event. So ultimately they did increase. It's not heavily shorted, so don't get me wrong, I'm not bringing it up because of that, but they did increase from 2.16 to 2.98%. So again, they kind of felt that it was going to be a miss, but 4.31 million shares overall are being shorted. Moving over to options, of the call options that were purchased on Friday, you see a consensus for it to be roughly around 130. So a little bit of a recovery, nothing crazy. Bears are anticipating for it to be sub roughly between 117 and 120. So more of a further breakdown anticipated, but with it right now at 125 and change, it is trading between this pivot and this S1. So 116 will be the next strong support. Flip side, 134 is going to be the next strong target / resistance point. So kind of just take note of all of that. Aside from that, though, it's definitely been very volatile. So this is why you have a very wide gap between many of these fib levels. So kind of the moral of the story, there's going to be a lot of continued volatility. So just be aware of that. As far as analyst expectations, let's kind of pop over here and take a look. So encumbering their earnings, you had a couple that did come out. So you have a 165, 140, 165. So kind of within that range for the most part. And oddly enough, I don't know why, it just never really makes sense. Analysts give ratings before the earnings. In obviously these two individuals' case, so Michael and Rashish, who has a ultimately 51 and 43% success rating, they did both give sell $90 and $75 price target. So they did that leading into the earnings, so they kind of come off as very smart-ish. So they did somewhat anticipate a pullback. So they were right on the direction, not so much on the price point. But aside from that, you have 175 and all that. So yeah, you have kind of polar opposites for analyst expectations. As a consensus, $147.23 is that price target, and that does represent a 17.62% upside from these prices. So let me know your viewpoint on that. If you are wanting all of this to be completely free, so analyst ratings, forecasts, ownerships, everything, short interest, then definitely take a look at IBKR. Link in the description below and also the comments for all of it to be completely free. And with all of the 13 Fs coming in, on a side note, this is of course unrelated to the actual earnings, but looks like institutions did reduce 12.95%. Strategic entities did increase 2.9%, and other, aka retail, did go up. So this usually, whenever institutions kind of get out, that is a sign of a pullback potentially coming. So again, that's a little bit more of a bigger picture kind of mentality. But aside from that, though, looking at this is going to be going over the absolute key highlights, future guidance, and everything. So give yourself a shout out if you did buy, if you sold, or whatever else. So with all that, appreciate all of you watching.
Twilio outlines 2025 targets with $825 million, $850 million free cash flow, and 7% -8% growth. Earnings call insights, Twilio Inc. TWLO, Q4 2024 management view. Twilio reported $1.195 billion in Q4 revenue, reflecting an 11% year-over-year growth. This marks the second consecutive quarter of double-digit growth and the company's first-ever quarter of GAAP operating profitability, which CEO 𝗖𝗎𝗪 described as a significant milestone. The CEO highlighted the launch of 251 new products, enhancements, and services in 2024, driving innovation, customer engagement, and AI adoption. Notable contributions came from Cyber Week, where Twilio supported over 65 billion emails and 5 billion messages with 100% uptime. New capabilities were rolled out for RCS and WhatsApp messaging channels, with RCS proving to be a valuable tool for brands like MarketBeat. Additionally, Twilio's AI-enabled products gained traction, with 90% of Forbes 50 AI startups now building on Twilio. CFO 𝗖𝗢𝗡𝗡𝗘𝗖𝗧 reported record non-GAAP income from operations of $197 million and $93 million in free cash flow for the quarter, emphasizing strong cost discipline and revenue growth across the year. Twilio completed a $3 billion share repurchase program in 2024, reducing its outstanding share count by 16%. Outlook: Twilio provided Q1 2025 guidance of $1.13 billion to $1.14 billion revenue, translating to 8%-9% year-over-year growth. Full year 2025 organic revenue growth is expected to be 7%-8%, in line with prior guidance. Non-GAAP income from operations for Q1 is projected at $180 million to $190 million, while full year 2025 guidance targets $825 million to $850 million in free cash flow. The company reiterated its longer-term financial framework, aiming for a 21%-22% non-GAAP operating margin by 2027 and cumulative free cash flow of over $3 billion from 2025 to 2027. Financial results. Twilio's Q4 2024 non-GAAP operating margin reached 16.5%, supported by record non-GAAP gross profit of $621 million. Though gross margin declined slightly quarter over quarter due to higher hosting costs during Cyber Week, communications revenue grew 12% year over year to $1.121 billion, driven by strength in messaging and email. Meanwhile, segment revenue declined by 1% year over year to $74 million, though bookings showed improvement. Dollar-based net expansion rates improved, with the communications business at 108%, indicating strong customer retention and expansion. Twilio noted a $17 million bad debt expense in Q4 related to a Brazilian telecom customer, which impacted operating margins by 140 basis points. Q&A. James Fish, Piper Sandler questioned the impact of crypto-related volumes on messaging growth. CFO 𝗖𝗢𝗡𝗚𝗘𝗖𝗧 clarified that while crypto volumes improved slightly, they remain immaterial to overall business performance. Michael Turrin, Wells Fargo Securities, asked about durability of growth improvements and swing factors for maintaining double-digit growth. CFO 𝗖𝗢𝗡𝗚𝗘𝗖𝗧 emphasized broad-based contributions across products, geographies, and industries, as well as prudent planning given the usage-based revenue model. Ryan Koontz, Needham & Company, inquired about the early-stage readiness of the RCS market. CEO 𝗪𝗓𝗏 noted its limited adoption, but highlighted its potential for rich, branded communications. Nicholas Altman, Scotiabank, asked about the contributions of large deals to communications growth. CEO 𝗪𝗓𝗏 pointed to broad-based strength rather than reliance on large deals, while emphasizing cross-sell opportunities. Sentiment analysis. Analysts displayed cautious optimism, praising Twilio's return to double-digit growth and disciplined execution, while raising questions about macroeconomic impacts, RCS adoption, and AI-driven revenues. Management remained confident, highlighting strong execution and strategic focus. CEO 𝗪𝗓𝗏 frequently reinforced the importance of innovation and disciplined operations, while CFO 𝗖𝗎𝗓𝗏 maintained a prudent tone regarding usage-based revenue dynamics. Compared to the previous quarter, sentiment from both analysts and management appeared slightly more positive. Reflecting progress on key financial and strategic metrics. Quarter-over-quarter comparison. Q4 revenue growth accelerated to 11% year-over-year from 10% in Q3, driven by stronger messaging and email performance. The Q4 dollar-based net expansion rate for communications improved to 108% from 106% in Q3. Twilio achieved its first-ever GAAP operating profitability in Q4, a key milestone compared to Q3's GAAP operating loss. Management's tone in Q4 was more confident, reflecting progress toward GAAP profitability and enhanced operational discipline. Analysts remained focused on usage trends and AI adoption, consistent with prior quarters. Risks and concerns. Twilio's usage-based revenue model introduces variability and limited visibility, particularly in dynamic markets. Gross margins were impacted by a higher mix of messaging revenue and elevated hosting costs during peak traffic periods. Segments revenue decline and sub-100% expansion rate remain areas requiring improvement. Though management expressed optimism about multi-year contracts and technological advancements, a $17 million bad debt expense related to a Brazilian telecom customer highlights potential risks in receivables management. Final takeaway. Twilio marked a milestone in Q4 2024 by achieving its first-ever GAAP operating profitability, driven by strong growth in communications and disciplined cost management. The company provided prudent 2025 guidance, targeting 7%-8% organic revenue growth and $825 million to $850 million in free cash flow. With a robust innovation pipeline, including AI-driven solutions and expanded messaging capabilities, Twilio is well-positioned for sustainable growth despite ongoing challenges in segment and macroeconomic uncertainties.